Did you know that over 60% of middle-aged Americans keep the majority of their wealth in cash held in bank accounts, but this very habit causes them to miss out on opportunities to grow their assets and protect their value against inflation? Many have experienced the unsettling feeling of watching their savings lose value over time without knowing how to optimize their money. In this video, I will reveal 7 assets that are better than cash for retirement planning, helping you both safeguard your principal and generate passive income while growing your wealth long-term. Be sure to watch until the end so you don't miss the most crucial tip that can transform how you hold and invest your money for a more secure retirement. 1. Government bonds. U.S. government bonds are among the most popular and safest investment options for those preparing for retirement, especially middle-aged individuals. These bonds are issued by the federal government, offering stable interest rates and very low risk compared to many other investment forms. Therefore, government bonds are considered an effective capital preservation tool, protecting your money from major market fluctuations while providing steady annual returns. Compared to holding cash in a bank account, which yields very low returns, government bonds offer significant advantages. Especially in the face of rising inflation, cash gradually loses real value, whereas government bonds, backed by the credibility of the U.S. government, help preserve your accumulated capital. The periodic interest payments not only maintain purchasing power but also contribute to passive income throughout retirement. Additionally, government bonds have good liquidity. You can easily buy and sell them on the market if needed. This flexibility allows you to manage your finances actively while maintaining access to funds without sacrificing returns. With high safety and stable yields, government bonds are a fitting financial tool to include in a retirement portfolio, helping you build a solid financial foundation for the future. Thus, instead of holding excessive cash in savings accounts, investing in government bonds helps protect your capital against inflation and generate stable income in retirement. This is one of the personal finance solutions recommended by many experts for a relaxed, worry-free retirement. Investing in government bonds is not only a smart move, but also a safe choice for those wanting to maintain long-term asset value. 2. Index ETFs. Index ETFs have become one of the most popular and intelligent investment options for middle-aged people seeking to build a solid financial base for retirement. The standout feature of index ETFs is that they track major stock market indices, most commonly the S&P 500, a benchmark reflecting the performance of the 500 largest companies in the U.S. stock market. By investing in an index ETF, you essentially own a small piece of many leading companies, creating a diversified and safer portfolio compared to buying individual stocks. A major advantage of index ETFs is their low management fees, which save you a significant portion of costs compared to traditional mutual funds. Additionally, ETFs have high liquidity and trade easily like stocks on exchanges. This provides flexibility in buying, selling, and adjusting your portfolio, ideal for investors who want active and convenient control over their money. Diversifying through ETFs also reduces risk concentrated in a few stocks, creating greater stability in your investments. The greatest benefit of investing in index ETFs is the potential for sustainable asset growth aligned with the overall stock market trend. History shows that the S&P 500 has generally grown steadily over decades, despite short-term fluctuations. Therefore, investing in index ETFs not only protects your asset value from inflation, but also increases investment worth in the long run. This is crucial for middle-aged individuals to maintain stable finances and grow assets large enough to support their retirement lifestyle. Compared to holding cash in bank accounts, index ETFs offer far higher earning potential while ensuring safety and flexibility in asset management. Especially for those preparing for retirement, harnessing the stock market's strength through ETFs helps build a solid financial foundation, bringing peace of mind and financial freedom in the future. Index ETFs are an effective financial tool suitable for middle-aged investors wanting to diversify portfolios, reduce costs, and grow assets sustainably. Investing in index ETFs not only protects capital but also optimizes long-term profits, supporting you in building a stronger and more efficient retirement plan. 3. Personal retirement accounts. Personal retirement accounts are an essential financial tool for middle-aged people preparing for a comfortable and financially stable retirement. The distinctive feature of accounts like IRAs, individual retirement accounts, or 401ks is the significant tax advantages they offer. This is one of the biggest reasons many choose personal retirement accounts over simply holding cash in traditional bank accounts. Tax benefits in personal retirement accounts come in various forms. For example, you may receive current income tax deductions when contributing or enjoy tax-free withdrawals during retirement, depending on the account type you choose. Thanks to these incentives, the money you invest has a better chance of growing faster because you don't pay taxes immediately on gains or interest earned. This helps you save a considerable amount of tax over the accumulation period. The biggest benefit of personal retirement accounts is their ability to help you accumulate more money over the long term. By investing consistently and patiently through the power of compound interest and investment returns, your assets grow stronger, creating a solid financial resource to cover your post-retirement life. This is a stark contrast to holding cash in savings accounts, which not only yield low returns but also lose real value due to inflation. Moreover, personal retirement accounts offer high flexibility in choosing investment types, such as stocks, bonds, ETFs, or mutual funds. This helps diversify your portfolio, reduce risks, and capitalize on growth opportunities from various sources. This balance between safety and return is critical for middle-aged investors planning for retirement. Effectively maintaining and utilizing personal retirement accounts helps you build a sustainable financial plan for old age. It not only shields you from inflation's erosion of cash value, but also creates a stable income source when you can no longer work. This brings peace of mind and financial freedom, allowing you to enjoy life after years of hard work. Personal retirement accounts, with their tax advantages and long-term growth potential, are a smart and essential choice for anyone planning for retirement. Properly leveraging these accounts will protect and grow your assets, ensuring a strong financial foundation for a comfortable retirement. This is one of the most important steps to prepare for a secure and stable financial future. 4. Rental real estate. Rental real estate is one of the investment options favored by many middle-aged Americans when planning their financial future for retirement. The standout feature of rental properties is that you can own a house or an apartment and lease it out, generating a steady monthly cash flow. This form of investment not only helps protect your principal, but also delivers a dual benefit through passive income and asset appreciation over time. One of the greatest advantages of investing in rental real estate is the reliable source of passive income. When you own a rental home or apartment, the monthly rent becomes an additional income stream that can help cover living expenses or contribute to other financial goals. Unlike cash sitting in a bank account earning minimal interest, rental real estate can generate positive cash flow, reducing your dependence on the cash balance in your savings account. Moreover, property values generally tend to increase over time, especially in growing regions or major urban areas. Owning an appreciating asset not only safeguards your investment against the eroding effects of inflation, but also creates opportunities for net worth growth. This is critically important for those preparing for retirement, as they require a secure asset base with long-term income potential. In addition, investing in rental real estate offers numerous tax advantages that help optimize profits and reduce management costs. Holding tangible assets also provides a psychological sense of financial security, because you are investing in something physical with lasting value that can be utilized or sold when necessary. Compared to holding excessive cash in bank accounts, investing in rental real estate not only mitigates the risk of depreciation due to inflation, but also establishes a stable and sustainable passive income source. This contributes to a richer, more resilient retirement plan, allowing you to live more comfortably and freely once you stop working. In summary, rental real estate is an effective investment vehicle that builds steady cash flow and increases asset value over time. Choosing to invest in this type of asset helps reduce reliance on cash while laying a solid financial foundation for your later years. It is one of the smartest financial strategies middle-aged individuals should consider when preparing for a secure and sustainable financial future. 5. Gold and precious metals. Gold and precious metals have long been regarded as valuable, tangible assets with the ability to preserve wealth effectively across diverse economic conditions. Their defining characteristic is that they are not directly impacted by inflation in the same way cash or other financial assets are. This makes gold a reliable, safe haven for investors, particularly during periods of economic instability, rising inflation, or volatile financial markets. The greatest benefit of investing in gold and precious metals is their capacity to protect wealth during turbulent market phases. When traditional currencies lose value or stock markets plunge into crises, gold prices typically rise due to increased demand for safe haven assets. This is why many investors include gold as a core part of their portfolios to mitigate risk and preserve capital. Additionally, gold and precious metals help maintain asset value as cash depreciates with inflation. While cash value can significantly erode over time, especially in high inflation environments, gold tends to hold relatively steady or even appreciate. Owning a portion of your wealth in gold safeguards your purchasing power and stabilizes your long-term financial plans, especially when preparing for retirement. Furthermore, gold and precious metals are highly liquid, easily bought and sold on global markets. This liquidity offers convenience for investors needing to quickly convert assets into cash. Diversifying your portfolio with gold prevents putting all your capital into a single asset class, thereby reducing risk and enhancing the potential for consistent returns. Compared to holding cash in bank accounts, investing in gold and precious metals not only shields you against inflation risk, but also strengthens the safety of your assets. This is an appropriate choice for middle-aged individuals seeking to protect their capital and ensure financial stability in an unpredictable economic environment. In conclusion, gold and precious metals are long-lasting, tangible assets that protect wealth during economic downturns and retain value as cash loses purchasing power. Incorporating gold into your investment portfolio reduces risk and lays a strong financial foundation, contributing to a safe and effective retirement plan. This strategy is ideal for those aiming to optimize asset protection and long-term growth. 6. Mutual funds. Mutual funds are a popular and effective investment option, especially suitable for middle-aged individuals seeking safety and sustainable growth for their assets. The defining feature of mutual funds is professional management by experienced financial experts who diversify investments across various asset types, such as stocks, bonds, and other securities. This diversification reduces risk compared to concentrating investments in a single asset. The greatest advantage of mutual funds lies in their ability to spread risk. Instead of personally selecting and managing each stock or bond, mutual funds provide access to a diversified portfolio without requiring significant time or effort. This is particularly valuable for busy middle-aged investors or those lacking extensive investment experience who still want to capitalize on financial market opportunities. Mutual funds are also well-suited for long-term investing, as fund managers continuously adjust the portfolio to align with market trends and investment objectives. This management can yield higher returns than typical savings accounts. Investing in mutual funds allows investors to harness the power of compound interest and market growth over time, helping build solid wealth for the future. Moreover, mutual funds offer good liquidity, enabling investors to easily buy or sell shares when needed. This flexibility reduces the burden of constant market monitoring and technical knowledge, making personal financial management more convenient. Compared to holding cash or keeping money in savings accounts, mutual funds offer more attractive earning potential while maintaining safety through diversification and professional management. This makes them an excellent choice for middle-aged investors who want to grow their wealth efficiently, minimize risk, and prepare a stable financial base for retirement. In summary, mutual funds are diversified, professionally managed investment tools that reduce risk and enhance long-term earning potential. Investing in mutual funds not only protects your capital, but also grows it more effectively than traditional savings. This is a smart choice for middle-aged individuals aiming to build a secure and sustainable retirement plan. 7. High-yield savings accounts. High-yield savings accounts have become an attractive option for middle-aged individuals looking to optimize their emergency funds. These accounts are primarily offered by online banks or modern financial institutions, typically featuring interest rates significantly higher than traditional savings accounts at major banks. This crucial distinction allows users to keep their money secure while earning better returns compared to holding cash in a regular bank account. The advantage of a high-yield savings account lies not only in its appealing returns, but also in its safety and liquidity. Like traditional savings accounts, deposits are protected by federal deposit insurance programs, providing peace of mind regarding capital preservation. At the same time, the strong liquidity allows you to withdraw funds easily when necessary, without the restrictions or penalties associated with some other investment forms that require longer holding periods. Another major benefit of high-yield savings accounts is their ability to optimize your emergency fund. Instead of holding this money as cash or in low-interest savings, you can leverage higher interest rates to grow your idle funds while maintaining safety. This is particularly important for middle-aged individuals who need flexible access to cash for unexpected situations while maximizing the earning potential of their reserves. Furthermore, high-yield savings accounts suit those who either do not want to or are not yet ready to invest in riskier assets such as stocks or mutual funds, but still want their idle money to avoid stagnation and erosion by inflation. It is an effective way to preserve purchasing power while maintaining maximum safety. Compared to holding cash in traditional bank accounts, choosing a high-yield savings account allows you to both safeguard your principal and earn more attractive returns, contributing to a solid financial foundation for retirement. It forms an essential part of a personal finance strategy that balances safety with growth. High-yield savings accounts provide a safe, highly liquid option with interest rates far exceeding those of ordinary bank accounts. Utilizing this type of account helps you keep your money secure while earning better returns, optimizing your emergency funds, and building an effective retirement plan. This solution is ideal for middle-aged individuals seeking to maximize the benefits of idle money smartly and safely. If you find this content helpful, don't forget to like and subscribe to the channel to stay updated on personal finance tips and effective investment strategies. Gaining knowledge and applying the right strategies will help you build a strong financial foundation, ensuring a comfortable, financially free retirement. Start today to keep your financial future protected and thriving.